Thank you so much for joining me today, Greg. Do you think that the situation has gone from bad to worse? I mean, when we see Spanish 10-year yields sitting at 7.6%, it seems the market doesn't believe that Greece is going to be able to get itself out, Spain is going to be able to get itself out of the mess. Spanish yields sitting at 7.6%.
Yeah, I think the market's probably telling you that the the Spanish government will have to ask for a bailout themselves, not only the banks, and that they can't, Spain won't survive without a direct bailout from the European. But I think obviously if rates were to move closer towards the 8%, then you would see certainly some significant action by the European Central Bank to have to start probably buying bonds again.
Yeah, I mean, the situation isn't going anywhere, so it's just worth noting where sentiment is on the day. But in the meantime, the South African markets managed to post a gain today, resources sector coming out on top, industrials not far behind. What are your thoughts technically on the market right now? What are you seeing in terms of technical indicators?
Look, I think technically, looking at it broadly, market's probably looking pretty overbought on industrial stocks, and a lot more value to be found probably in resources and financials. But certainly the market has been driven by the industrial stocks for some time, and they're looking pretty top heavy at the moment, although that run could still continue given the fact that we've cut our interest rates and there's talk about further interest rate cuts towards the end of the year.
So you see that interest rate cuts actually feeding into the real economy and helping to continue to prop up retailers?
Well, that's difficult to say. It was more of a bad news cut because worrying about what was happening. So I think South Africans are pretty much indebted at the moment, but it'll certainly give them, some relief. But whether it's going to translate into, spending in the economy, that's difficult to say, and it's probably unlikely.
Just looking at financial index, it closed pretty much flat today. What are your thoughts on the banks if we're talking about this interest rate cut and the effect that that's going to have on interest income going forward? There was an equity analyst, I think it was from Katie's, saying that it's going to wipe out 600 million rand from net interest income. Because of ABSA's hedging strategy, they're going to suffer the least. Overall, though, are you watching how banks are going to react to this?
Yeah, banks have been doing quite well up until the interest rate cut, but of course, lower interest rates affects the bank margins, and so I don't think that, with further interest rate cuts, that certainly will affect the banks. So I think that if you're looking for some real value in the market, you have to be brave, but the resources are probably the space. So
the bank space is one that you'd be playing in right now?
Well, we have been in banks. We have, you've seen some. I mean, I think First Rand has been probably one of the best performing banks recently.
It's only up, what, 50% this year?
Yeah, Nedbank as well, and that's of course ABSA with its trading update that's put that share under pressure. But generally, it's what happened to ABSA, it's not, doesn't mean that all the other banks have probably underprovided for their bad debts, but it'll be interesting to see when some of those trading updates come out.
Okay, we've had a trading update just come out from the resource space. Exxaro coming out with first half trading update and looking at headline earnings per share being up by between 5 and 13%. It has been a stock that's been hit by negative sentiment around Kumba iron ore, and of course that trading update that came out recently from Exxaro. But overall, do you like the exposure that it has to iron ore? Are you worried about that at this point?
Well, I think we prefer the diversified miners as opposed to the single commodity stocks. It's like Kumba or Exxaro. So you think we could get diversification looking at the Anglos and the Billiton. But it's been a tough time for resources companies given the the worries about a slowdown in China, global growth and that. So we'd stick with the diversified miners, but also Exxaro, the coal price has also been under pressure for a while now.
Yeah, I mean, talking about coal, Anglo American buying that the company coal project in Mozambique for $555 million. So it's interesting. It's kind of these bolt-on acquisitions that Anglo American is looking at and increasing their exposure to the coal market, metallurgical coal market. Do you like
yes,
that?
Well, I think, look, at the moment, in the resources space, you're going to probably find a lot of smaller acquisitions. You know, there's no appetite at the moment for the big mega merger. Financing would be a problem as well, and the ratios. You've seen that happen now with Glencore and Xstrata as well. So, but Anglo, I think it's a good business that they bought, and you know, they're looking towards the future when they're through the cycle, when the cycle improves.
Yep. Okay, well, thank you so much for joining us today, Greg Katzenellenbogen, Director at Sanlam Private Investments.